So Ayo, if let's say we were to hypothesize or today imagine the Q day, what is your timeline for it? What is Ayo's prediction for Q day, and when by when we can see that, okay, of course, measuring the advancements in the quantum technology, by which year you see some of these chains actually starting to break up?
Now, the thing that has changed in my perspective on that is the introduction of AI to help with building quantum computing hardware that is reliable, right? And NVIDIA released their open source models that in this direction that I think really didn't get a lot of attention, but I think in the coming, months and years, we'll see the fruits of the investment that they're making on that side that may speed up that possibility, right? And then the second thing that I think will change that timeline is really just the advances that are happening from the software side of things, right? The thing that's different about public key cryptography is the structure that's inherent in the algorithms that have been standardized, and used by blockchains. And it's that structure that software algorithms have been exploiting to try to, brute force, the ability to basically to break, the public key cryptography. And so because of that, I think, either one of those two things is going to accelerate. Both, and in worst case, both of those things may accelerate. And so with the research that's ongoing, I think my timeline has shifted from 2035 or 2030 to it could be 2029, right? It could be 2028. Is just really dependent on the progress that's being made on the research side. And so I'm more on the pessimistic side that we may see this happening sooner than we'd like. And that's okay, right?
Hello everyone, welcome to yet another episode of Voice of Web3 powered by CoinGape Media. Today we have somebody very special with us. As many of you requested details about quantum computing, you all are worried that what it will do to crypto, what it will do to your investments. So today we have again somebody very special who will help us understand and navigate these threats to the crypto ecosystem. So guys, without any ado, let me introduce our today's speaker with you. Today we have Ayo Akinyele, who is head of engineering at RippleX. He is a cryptographer, he's a tech entrepreneur, and he's right now heading RippleX as well, engineering department there. So he leads the technical infrastructure powering the XRP Ledger. You must have heard about XRP Ledger a lot in the recent times. He's focusing mainly on making blockchain scalable, secure, and ready for institutional grade DeFi. Ayo, welcome to the show. How are you?
Great to be here. Thanks for having me, Sunil.
Yeah, so Ayo, before I get into deep down into the topics, there is of course one question which I wanted to ask you to start off the podcast, that you actually wrote the paper. You actually wrote the quantum resistance paper, which I am told that, and that paper actually outlines that how Ripple is managing this quantum threat. So, do you also see that this is actually a threat? How close we are, where we actually see this, start seeing this as a threat, or do you think that we are already there?
Yeah, so this has been a topic that has been on my mind for quite some time.
Mm-hmm.
And the team has been working on, quantum readiness for quite some time.
Mm-hmm.
So the thing that's actually changed is the public perception that the timeline has changed. I wouldn't say just public perception, but the reality is that the research that we have been paying attention to is basically redefining when quantum attacks could be real. And so there's this notion of Q day that used to be uncertain, but now there's certainty that it's going to happen at some point in the next few years, based on the advances in quantum computing and the software algorithms that can break public key cryptography, which is what blockchains have been built around. And so it's the convergence of those two tracks that's changing the timelines from something that was uncertain to something that we know is certain. And the standardization processes are moving forward on top of, the research for, what would be quantum resistant, and from a digital signature perspective. But there's also encryption, and there's a lot of protocols that are underpinned by cryptography that we're now revisiting from a quantum lens, because we have to be able to be ready for this actual threat that will materialize in the future.
So data shows that because of the structural differences in the address models, a lot of Bitcoin is quite vulnerable to these threats. How close do you think is quantum computing close to breaking the Bitcoin encryption today?
So again, I think there's a misconception about what happens to Bitcoin versus what happens to the rest of the ecosystem. It's not just a Bitcoin problem. It is so the digital signatures that are being leveraged by Bitcoin are similar to Ethereum and XRPL. It's the same fundamental algorithm. And so, what happens to Bitcoin happens to everybody else. The difference is what primitives are native to Bitcoin that are also or may not be native to other chains. And so, Bitcoin obviously has the same weaknesses, but the problem is that, this is an area that I think has gotten a lot of attention because, the Bitcoin community is diverse, right? There's a lot of different voices. But on the XRPL side, I think, our approach has been to lead with proactivity, to kind of think through, ways we can protect assets on Ledger, to make sure that we're on the forefront of, how do we actually, mitigate this threat when there's, uncertainty about when it could actually happen, right? It could happen any day or years from now, right? And so because of that, the certainty of it happening, but not knowing an exact date, there's a certain posture that we have to have. And I think for us on the XRPL side, it's been to lead with, proactivity, and sort of build with the entire ecosystem in mind and all the stakeholders that we're supporting. Excuse me. And so when I think about the challenge on Bitcoin, obviously the same quantum threat is there, right? Meaning that it can basically break the public key cryptography and make it difficult for users to prove ownership of assets when you sign a transaction and you publish the signature, and within seconds or minutes, not in seconds, but within minutes, that being compromised in some way, right? And so I think there's the signature problem, and then the encryption problem is a little different, which is the fact that the data that we are securing today with the public key infrastructure that we have, that's not quantum resistant. There is a opportunity for attackers to just harvest that data and store it and keep it for the day where they can decrypt that with a powerful enough, quantum computer. And so that's the whole notion of a harvest now, decrypt later, methodology. And so what that means is that, anything that is related to our secure communications, anything that's related to how we, how we interact with our banking infrastructure, how we, secure data that is most sensitive, all of those things can be compromised, the moment such a powerful computing threat computing hardware is available. And I think it's like both of those things are happening in real time, and sort of positioning us to face this problem in the future, where if we're not deploying the cryptography that is resistant to these threats, we will be reactive in terms of this notion of Q-Day happening, and then we'll be rushing to upgrade our critical infrastructure without the time to control it, right? And so what this would actually look like in reality is that someone will develop this technology, they'll exploit it in private or silently, and it'll take more time to detect that it's actually happening, because it's not going to. It's going to be in the best interest of whoever has this, capability to do it without making much noise initially, right? Especially folks that are still doubting that it is possible, right? And I think it's that silent threat that will result in Q-Day. And I think just being ahead of the curve is really the most beneficial stance that you could take, because it's more about protecting our most critical assets across financial infrastructure, as well as government and I would say societal infrastructure in terms of our critical grid. And so that's kind of how I think about it. It's more than just blockchains, but blockchains is where it kind of comes together because of the way it has grown in importance from a critical infrastructure perspective for financial use cases.
So there are around more than 1,000 blockchains today.
That is correct.
And all of these chains are now basically fighting with each other, competing with each other to secure a share of the market in terms of the value that is flowing using them. Do you really think that these blockchains are equipped with these quantum resistance technologies, or do you see a lot of them actually being really vulnerable and not actually taking steps? So my question is, what percentage of these blockchains you think will not be able to survive this threat?
I think it really depends on what those blockchains decide to do, right? Regarding being prepared for this threat. And I can't speak to the outcome. I can speak to what we're doing on the XRPL side to lead by example, because I think there are shared problems across blockchains, but then there are problems that are localized to specific chains based on their architecture. And I think for us, we started with sort of a couple of techniques that are native to XRP Ledger in terms of providing native key rotation. And so it's this ability to change your keys without changing your address, right? So people can still send funds to the address that you advertise, but the underlying public and private key pair that is backed by that address can be switched out, right? And what that means is that any transaction that you sign as you rotate the keys will change, right? And so the implication of that is that it takes more time for a quantum adversary, I'll say, to compromise assets if you're constantly changing or rotating your private and public keys as part of your daily operation. And so this is a technique that is really localized to XRPL architecture, and I think there are a couple of other chains that might follow the same model. But we were the first to kind of show that you could do this on a public blockchain, and it's now serving as an asset for defending against quantum threats. The other thing that we're doing is adding the ability to migrate from public key cryptography, the classical version that we have today, to a quantum resistant one through the seed migration. So a combination of zero-knowledge proofs plus the seed that you generate to produce to derive your public and private keys, being able to leverage a protocol around zero-knowledge proofs to basically migrate those assets. Migrate the key pair to something that's quantum resistant. And I think that as a separate tool in our arsenal provides another way for us to help the ecosystem protect assets. And so we're working to upgrade the architecture of XRPL over the next couple of years. But I think the best way we can influence the hundreds and hundreds of blockchains that have this problem as well is to show them how to do it with a very high bar with financial institutions, which is where XRPL is focused, right? As in terms of building the use cases that make it easier for financial institutions to bring their off-chain activity on Ledger. And so they demand security, reliability, and all the properties that we've been trying to execute on XRPL in a way that makes it future proof, right? And I think the cryptography side is also following the same model to make sure that we protect the assets that are on XRPL for decades to come. Right? And so
Ayo, So if I am today an average investor, I have recently been introduced to crypto, and of course, the majority of the interest in crypto comes from the investment part of it, the speculation part of it around the price. But now, when somebody's investing, they're actually trying to understand that, okay, the chain that I'm investing in, the coin I'm investing in, is actually how vulnerable it is to, let's say, quantum threat. Now, is there any particular consensus model, or is there any particular classification in blockchains which you see is actually quite more vulnerable to threats as compared to others? So I'm basically trying to understand that, okay, if somebody is, let's say, today choosing POS blockchains or POW blockchains, so is there any classification like that which can be utilized by investors to protect themselves, that some blockchains are more vulnerable as compared to the others?
Yeah, so I think when it comes to consensus, that's an entirely different set of factors that determines vulnerability relative to quantum computing. I think one factor that is often kind of not really well understood is the validator part. The decentralized network that supports the blockchain ecosystem, how those validators interact. What kind of messages that they're signing between each other, like that is another part of the problem set that has to be thought through, right, relative to impact of quantum vulnerabilities. And I think again that's where we've taken on a different approach on XRPL by starting those conversations early and helping lay the foundation for how do we solve those problems together with an understanding of the hardware that the operators of this of a network that is supporting consensus are operating, right, and their requirements and storage and memory, right? Like those are considerations for how do you protect how do you make sure that you think through the security for the nodes that are supporting the consensus protocol, right? And so it's less about like proof of stake versus proof of work, although there are elements of proof of work and proof of stake that make this a little bit more complicated. But because on the XRPL side, we don't have an economic incentive for executing consensus. It's a different problem on our side in comparison to blockchains that do have an economic incentive as like baked into their consensus protocol, right? And so it's just like they're just different factors that determine the level of complexity, but it's still at the end of the day, the way to get through it is through just R&D and understanding the complexity that you're trying to solve for, and trying to balance the economic aspects, right, and the hardware aspects of supporting the consensus of any consensus protocol across the different obviously there's the hybrid solutions as well that do a mix of POS and POW proof of work. So yeah, it's a hard question to say there's one answer because it really depends on a lot of factors. But the approach is still the same. You have to be proactive in understanding the impact of the quantum threat relative to the specific chain you're talking about.
Yeah, this is actually a very good topic for a case study, if RippleX can do that. So I mean, you are a senior director of engineering at RippleX right now, and for those who don't know about RippleX, we would love for you to help us understand that what RippleX is, what is its objectives, and how is it connected with the day-to-day operations of Ripple or XRPL today, XRP Ledger.
Great question. So RippleX is one of the stewards of the XRPL or XRP Ledger blockchain ecosystem, and we focus on the stack. So this is the node that the validators run. So XRPLD. The client libraries that support, people integrating with XRPL. We, provide, support to the ecosystem in that way. We work with the XRPL Foundation and XRPL Commons as well. And our goal is really to just, lead with protocol, level development, focusing on security and quality for the features or the amendments that are added to the XRP Ledger, because the majority of the work so far has been at the protocol level, so native features that are accessible via APIs and don't require like smart contract experience necessarily to interact with them. And so we spend a lot of time basically making sure that we are hardening the protocol, identifying bugs, leveraging AI to help with improving the security of the stack, helping drive adoption across custody and wallet implementations, and making it easier to go beyond payments, right? So payments has been the dominant use case for XRP Ledger for quite some time, and XRPL has a lot of history, as you know. And so our role on the RippleX side has really just been to steward the ecosystem as one of the key contributors, and making sure that we're leading with security and quality as we build out features that support financial use cases, right? Which I can talk about more, that go beyond payments.
Okay. So, you actually sparked a debate a while back when you mentioned something about XRP staking it, and it got the whole community quite excited about it. And they all have been asking this question since then. So, what is the status of XRP staking? Is it actually coming to the network soon?
Yeah. So, I think people focus on the staking part. But what was interesting, what interested me the most was, this broader question on like how XRP utility continues to evolve as the ecosystem grows. Like XRP has already expanded well beyond this role. And, today it's like payments, liquidity, settlement, tokenized assets, like that. And that's being, the increasing part of the conversation with, financial institutions. And so the staking part was really just a thought experiment, about understanding the trade-offs. XRPL was really designed for, payments as a starting point, but it's kind of different than other networks. And so, what I mean by that is that like there's no economic incentive, to run a validator, on the ledger for the XRPL. Fees are burned, right? And validators aren't necessarily compensated through staking rewards. And so a lot of the validators that are supporting the network are really doing it because they, align with what we're trying to accomplish on the XRPL, and they are, operators that have businesses that are, doing, well, and they're running the validators not as a means to generate rewards, but just as a means to support, the network and the financial use cases that we're trying to build on Ledger. And so, but once you start like talking about native staking, it really changes the complexity of the network, right? It tests the core assumptions of XRP Ledger. And that's why I think it's not something that can be necessarily like rushed from hey, it's a great idea, let's just import the notion of native staking. It has to really be thought through relative to how the network was set up in terms of the moment you start redistributing fees, then some people will benefit and others won't. Right today, because all the fees are burned, that are tied to XRP. Every XRP holder benefits, right? If those fees are redistributed, then it's like you're introducing an incentive, but then you're disincentivizing others, right? And so that imbalance, creates a dynamic that may compromise the strengths of XRP Ledger, right? And so it's something that, again, it was a thought experiment. very much my personal view is just that, these are healthy conversations to have, but it has to be balanced, with, sort of the properties that we're trying to preserve on XRP Ledger that are beneficial to everybody, right? And that's not to say that we shouldn't think about ways of rewarding, people that are doing the work and supporting the network. I just don't think I don't think staking necessarily is the only way to think about doing that, right? And so it's still something that I'm interested in from a like, how do we enable viable opportunities for people to capture value on XRP Ledger and support a network across the stack. I just don't feel like it's something that is easy to kind of just position as XRP staking as the only way to think about that.
So Ayo, you mentioned AI agents, and there has been a lot of recent debates, conversations that how the world of AI agents will look like. And you recently introduced an AI starter kit as well on XRPL. So if let's say somebody who is very new to AI crypto is hearing or listening to this podcast, can you give us an example that what it would mean actually these agents doing payments or conversations among themselves?
Yeah, so traditionally AI has been viewed as like a chatbot, right? Like
Yeah,
the chat GPT, that was everyone's introduction to AI. And so we're shifting from like a chatbot model to like agents that can actually take action on your behalf to accomplish a goal. And so what that looks like is like, being able to tell an agent to, find you a hotel, or find you the cheapest flight, to New York. So like doing useful things that require like searching the internet, doing research, optimizing for cost, actually doing the booking on your behalf, having your personal information to actually be able to do that, to actually make the payment on your behalf, right? All of those things, are what agents are going to be able to do and do really well. And so that is a future that, will actually be much more efficient on blockchain rails. And I think the blockchains that are positioned for this, have to have low cost, have to be able to support, scale, have to be able to, be secure, obviously, and be reliable. And that's because, this is like small payments and small or large payments are what agents will kind of start to do more of, and that will grow and scale. And so we built, we launched the XRPL starter kit, AI starter kit, mainly to enable agents to transact with RLUSD and XRP in particular, to pay for APIs, to be able to pay per byte or per, API call, to be able to pay for the data and the compute resource and the digital content, to just provide this building block, for agents to be able to do this. And so we're still early, right? But the opportunity is really significant when you think about just the potential for machine-to-machine commerce, and how this could happen, in an organic way. And we're starting to kind of see the building blocks of that emerge. And so we're trying to position XRPL to kind of have the AI infrastructure that developers need to be able to do this without friction, right? And I think this is where opportunity meets something that's already well, positioned to kind of, help unblock agents that are trying to, or AI agents that are going to be natively part of the, economy, right? So I think for us, e-commerce is going to grow in ways that we can't even, estimate right now. But it's going to grow in ways that will accrue more value to blockchain rails because of stablecoins now being a thing, because blockchains are now more interoperable, because agents are able to reason a lot better and can make choices in a way that is aligned with goals, right? So there's just a lot of things converging right now that makes it timely for us to be releasing the starter kit to make XRP Ledger one of the go-to chains that just makes this easy for agents.
Yeah. So I will. So we will go back to a bit more quantum because most of the questions that we have received for this podcast from our audience are around that only. Everybody is super worried. Everybody is seeing this as a real threat, and they just want to make sure that we are not holding a coin or we are not using a chain that actually becomes the victim of the Q day. So Ayo, if let's say we were to hypothesize or today imagine the Q day, what is your timeline for it? What is IO's prediction for Q day, and when when we can see that? Okay, of course, measuring the advancements in the quantum technology, by which year you see some of these chains actually starting to break up?
So are you asking when I see Q day happening or when I see people migrating? Just want to make sure I heard you correctly.
No, so what I mean is that, of course, I mean, quantum threat will not come to all the chains at once. I'm sure that there will be some easy targets and they will start breaking up. So in that comparison, the Q day for them will be quite sooner. So when do you see that some of these chains actually starting to break up in that sense? Or
Gotcha.
do you really think quantum computing today is at that level that it can actually break some of these chains
No,
today?
not today. Not today. I think the bet that I'm making is that a useful quantum computer that's reliable, free of errors and can kind of execute in a way that can break cryptography is still not reachable yet, right? There's still a lot of things that can happen for that to be true. Or there's still a lot of work that needs to happen for that to be true. Now, the thing that has changed in my perspective on that is the introduction of AI to help with building quantum computing hardware that is reliable, right? And NVIDIA released their open source models that in this direction that I think really didn't get a lot of attention, but I think in the coming, months and years, we'll see the fruits of the investment that they're making on that side that may speed up that possibility, right? And then the second thing that I think will change that timeline is really just the advances that are happening from the software side of things, right? The thing that's different about public key cryptography is the structure that's inherent in the algorithms that have been standardized, and used by blockchains. And it's that structure that software algorithms have been exploiting to try to, brute force, the ability to basically to break, the public key cryptography. And so because of that, I think, either one of those two things is going to accelerate. Both, and in worst case, both of those things may accelerate. And so with the research that's ongoing, I think my timeline has shifted from 2035 or 2030 to it could be 2029, right? It could be 2028. Is just really dependent on the progress that's being made on the research side. And so I'm more on the pessimistic side that we may see this happening sooner than we'd like. And that's okay, right? Now, there are people that believe that we're still far off, right? This is just like there are people that believe that we're always 5 years away, right? And they've believed that for the last 10 years, right? So there's just you'll find people on both sides. I'm just a little more pessimistic in the sense that I'm betting that there may be more progress because of AI than we would like. That could change how quickly this can happen. And because of that assumption, I would prefer to be proactive in dealing with the threat rather than wait to find out, right? And so I think waiting is the worst outcome. But there are that the people that are advocating to wait are not wrong, right? It's not that I'm saying that they're wrong. I'm just saying that I think that's too risky from my perspective, given the possibility of this actually happening and us being unprepared if it were to happen, right?
Got it. Got it. So, Ayo XRP Ledger definitely is making long strides. It has progressed
Hmm.
really well. Congratulations to you and your team. And of course, right now, if you see in any spectrum, whether it is stable coin transactions, whether it is DeFi, and even whether it is payments, we are seeing a lot of adoption taking place. Now, when we talk about XRP Ledger, we of course today talk about other chains as well. I
Right.
mean, any institution, any big family business who are trying to, let's say, today bring their assets on chain, or who are trying to utilize blockchain for making transfers across countries and globe, they have to make a choice. They have to make a comparison, right? So for them, what makes XRPL stand out today that you think that other chains are
Mhm.
quite lagging behind?
Yeah, so I think it's just a couple of things. So transaction fees are low, right? It doesn't cost a lot to do a basic payment or to execute a transaction. The settlement times are fast, so
Mhm.
3 to 5 seconds to achieve consensus per ledger, and the the APIs are very straightforward, right? In the sense
Mhm.
that to integrate, you don't need to be a smart contract expert. And so when you add all those three things together, it just kind of gives you a nice set of properties to build a reliable and secure blockchain that's tailored to financial use
Mhm.
cases. Like it's purpose built. And so payments was the starting point.
Mhm.
Um, Now we've evolved beyond that to stable coins and tokenized assets and we have the native DEX, right? So we have all of these features that make it so much easier for enterprise and institutions that want to just build on a stack that it looks a lot like what they already do today. Meaning the
Mhm.
surface is not very complex, but obviously underneath the hood, there's quite a bit of
Mhm.
complexity that's been abstracted, and so from a customer end user perspective, um, it's an easy thing to explain and for people to understand. From an infrastructure perspective, that's where we're kind of doubling down to just make sure that it's secure, it scales. We're leveraging AI, so we're doing a lot of things to harden and build a robust financial operating system so that
Mhm.
institutions can rely on the stack, right? And I think that's what's exciting about our approach. And I think for the folks that we've been collaborating with, XRPL comes to the forefront because of the things that they can rely on and the properties that they're that are getting proven out over time.
Yeah. I mean, when we talk to institutions, we are engaged with some of these projects where we are trying
Mhm.
to tokenize real estate, we are trying
Right.
to tokenize gold.
Hmm.
And it's very hard for traditional investors or TradeFi, as we call them, to actually grab the importance of this today.
Right.
They may see it as, let's say, a wow factor for technology. Oh, you're making so much transactions in such short
Hmm.
time and at such low cost. But they still are not that, let's say, very much, I would say, ready to actually use it for day-to-day tasks. So
Hmm.
what are some of the common cash questions you get when you get into discussions with these clients? I'm sure they must be interesting.
Yeah, I think it comes down to the problems that they're trying to solve for, right?
Uh-huh.
Like it's less about the features and more about like what those features unlock, right?
Mhm.
Sorry, what I mean by that, like less about the individual features,
Mhm.
but like together, what do they allow you to
Mhm.
accomplish? And so the conversations really boil down to, okay, what they're doing on other chains, right?
Mhm.
How what they're doing on other chains would look like on XRPL,
Mhm.
what features they may be missing, what, like, because again, anyone that's coming to us either is coming with the understanding of a smart contract blockchain, or they're coming up to us with an idea and
Mhm.
they want to understand exactly how the building blocks on XRP Ledger allow them to execute that idea, right? So both are equally important. It's just that we're optimizing for different things when we talk to both, right? And so for the folks coming from the smart contract world, it's like, okay, how do I actually map what I'm already doing to
Mhm.
what you have on Ledger? And so we walk them through that and kind of show them, the building blocks that enable that, right? And then for the folks that that don't have that grounding, we basically provide a solution that helps them, see that, right? And we do that through pilots. We do that through a combination of kind of, just storytelling of what they're trying to do. So if it's like a tokenization type of use case, and that's kind of, a very clear story of, okay, I have this asset that I want to tokenize, and I want to basically able to do things with that asset once it's tokenized, whether it's trading, whether it's moving it for the purposes of being able to borrow against it, right? So I think there's just a number of useful things that people want to do with tokenized assets. And to make that real requires an understanding of the legal framework that needs to be part of the tokenization process. And so that's what we've been spending a lot more time kind of building depth of understanding.
It's a real headache,
yeah. The legal framework, because that if you don't have that, it's just anybody can call anything tokenized, right? But it's meaningless.
I remember when we started out, it was more about a tech challenge.
Right.
But soon it became a legal challenge. And
exactly.
And since the last 6 months, we have been in that legal challenge.
Yeah. And the thing is, a lot of people, underestimate the complexity of that legal challenge, right? And all the hoops that have to be jumped through, and then that's where TradFi meets blockchains, right? Like it's that intersection that, we've been spending a lot of time on the Ripple side, so that it becomes turnkey for the institutions that we're serving, right? And I think that's the opportunity. And I think, that's where a lot of the growth will happen, once there are platforms like ours that kind of solve for the right things to make it turnkey.
I mean, it gives an opportunity to create now very personalized solutions as well, because finally there are regulations. Finally, things are getting at a stage where you are country bound, you are jurisdiction bound.
Mm-hmm.
And I do see this as a challenge currently, of course. I mean, if you talk about hard assets like real estate, it's a big challenge. I mean, we got into it, and right now, as you rightly said, I mean, we are legally right now. So the team was supposed to be tech heavy. Right now, it is quite legal heavy. We all are. The tech is right now just waiting for them to do their job. So yeah, I mean, it seems quite interesting, but right now the adoption seems to be only the side of, I would say, the money markets, which are there already, like bonds, treasuries, or maybe stocks.
Right.
So this is where my next question is, Ayo, that what are those some of the use cases where you're seeing, let's say, quite a lot of queries and quite a lot of excitement as compared to others? So are there any particular use cases where you see a lot of demand, a lot of requests coming to you?
Definitely. I think the one that comes to mind is related to our pilot with MasterCard and Ondo and JP Morgan. It's just this notion of tokenizing a treasury fund, and so the flow is like this. Like basically, we have the tokenized treasury that's issued by Ondo, and then it's basically redeemed, on chain by Ripple, and then settlement is coordinated across like traditional financial infrastructure involving MasterCard's multi-token network, and then kinesis by JP Morgan. So you have all these things coming together to just support the movement of this tokenized assets through this financial workflow that is involving like redemption and settlement and coordinating across multiple institutions, right? Like that is a multi-company tied to a blockchain type of use case, right? And multi-institutional type of thing. And so it just shows me that like this is where tokenization is headed. So it's not just about putting the assets on chain, right? It's about really enabling those assets to move and settle and be used within financial markets very efficiently. And I think that use case is just under what's the right word? Underappreciated and underestimated. I think is what I'm getting at. Underestimated by the market about what this unlocks when you think about collateral mobility and liquidity for tokenized assets, right? There's just a lot of things that can be done to change how we transact that will not change the end user experience, but will definitely increase the global, TAM around, tokenization, right?
Yeah, so I was recently with another guest, and I was actually with Nansen.ai founder. He has a lot of data. The company accumulates a lot of on-chain data. They have been doing it for a long period of time now. And when we were discussing that, we came to the very good realization that, okay, why crypto, why this makes a lot of sense is because most of the folks, they don't know even about banks today who are transacting in crypto. Crypto seems to be the answer to the last mile delivery for finance. If you talk about crypto, if you talk about underserved people in finance system, then crypto actually has reached there. If you talk about Africa, you talk about Southeast Asia, many people don't even have banks. They're receiving their salaries, they're receiving all of their income in USDT, which they cash out at the local vendors. So they don't even need banks right now to actually make their livelihood. So that seems to be a remarkable transition that is taking place. And I'm
Right.
sure that experiments, I'm sure that innovations like XRPL, innovations like RippleX will have people to basically take this ahead further. So
100%.
thanks a lot. I know we have taken a lot of your time. This was quite
That's
entertaining,
fun.
and your views about quantum, your views about AI agents, and your views that how XRPL is actually different, how they are trying to, let's say, stay proactive when it comes to quantum threat, will definitely help others to actually take steps in their own sections. Thanks a lot, Ayo.
No, it's my pleasure. Really enjoyed the conversation and the questions.